When Credit Suisse announced it would open its first office in Saudi Arabia in early 2021, Bruno Deher, the cigar-smoking head of Credit Suisse Middle East, declared it a key growth market. As a symbol of the growing relationship between the storied Swiss lender and the wealthy kingdom, the branch was located at the intersection of King Abdullah and King Fahd roads in central Riyadh. Despite this, the relationship has soured spectacularly 2 years later. A Saudi investor played a key role in the demise of the 167-year-old Swiss lender after tenured comments sparked a run on the bank's shares. As a result, the Saudis have blown up their own investment, causing recriminations at home and raising serious questions about the country's ability to establish a foothold in the global banking sector. Credit Suisse has had a presence in Saudi Arabia since 2005, but ties have deepened in recent years as Crown Prince Mohammed bin Salman opened up the notoriously conservative kingdom to foreign companies and influence. The Swiss bank won a local banking license in 2019, allowing the lender to offer a full array of products and services as it sought a share of the oil-rich Nationure team's lucrative deposits. When veteran investment banker Michael Klein was sent out by Credit Suisse in search of investors to fund a radical restructuring plan last year, he turned to his contacts in the Middle East. To the delight of the board in Zurich, the former Citibank executive returned with a $1.5 billion, £1.2 billion check signed by Amr al-Qudairy, chairman of the Saudi National Bank. Saudi National Bank is the kingdom's largest bank, with more than $250 billion in assets. It was formed in 2021 following a tie-up between the country's National Commercial Bank and Saudi Samba Financial Group. Today, it dominates the kingdom's lending market with a 30% market share. The bank already held majority stakes in lenders in Turkey and Pakistan. However, al-Qudairy, an engineering graduate from George Washington University in the US, saw Klein's team his approach as an opportunity for Saudi National Bank to propel itself onto the international stage. In October, al-Qudairy told the Wall Street Journal, "The Saudi market is the 700-pound gorilla economically in the region, and just getting Credit Suisse to engage with us in Saudi Arabia would be more than good enough." Despite his financial advisors raising concerns about the investment following a litany of recent scandals at Credit Suisse, mortgage-backed securities directed the government-backed Saudi National Bank to inject $1.5 billion into the beleaguered Swiss lender last November. For years, Swiss banks have acted as a haven for wealthy Saudi families. The Crown Prince wanted the investment to act as a flashy first foray for the kingdom into the global banking industry. The investment made Saudi National Bank the bank's largest shareholder, with a stake of nearly 10%. At the time, al-Qudairy said, "We looked at the downside. We believe it is limited." He hailed it as a manifestation of the new Saudi Arabia as the country sought to diversify its economy away from oil. He has lived to regret those words. The collapse of Silicon Valley Bank last month sparked fears of contagion in the banking sector, with fears centering on Credit Suisse. The bank had already seen shares slide over 70% after a series of scandals and missteps. Al-Qudairy was asked on the sidelines of a conference in Riyadh whether Saudi National Bank would consider injecting more capital into Credit Suisse. "Absolutely not," he said. Those two words precipitated the demise of one of Switzerland's oldest banks, as well as al-Qudairy's own career. One senior investment banker says, "Had the Saudi bank head not said what he had said, I can't see the Credit Suisse saga playing out as it did. All he had to say was, 'We have not received a request for support from Credit Suisse. But if one comes, we will consider it on its merits at the time.' But he didn't, and the rest is history." The comments triggered a sell-off in Credit Suisse's shares and ultimately prompted the Swiss government to intervene. A rescue by Union Bank of Switzerland was hastily arranged over a weekend, an arrangement Swiss officials said was necessarily to prevent a broader financial crisis. Saudi National Bank and mortgage-backed securities were left red-faced and furious by the cut-price deal. Al-Qudairy was last week ousted after losing $1.2 billion on the investment in 4 short months. Qatar's sovereign wealth fund and the Saudi-based Alayan family also took sizable hits from the forced tie-up. Beyond Saudi National Bank, The debacle has raised questions about the future relationship between Saudi's wealthy residents and Swiss banks. Following its takeover by Union Bank of Switzerland, Swiss regulators controversially wiped out some of Credit Suisse's bondholders while returning capital to equity holders. Additional Tier 1 bonds, which are a bank's riskiest bonds, were introduced in the wake of the 2008 financial crisis to ensure losses would be borne by investors rather than taxpayers. They represent a key $275 billion market for the funding of European banks. Typically, in a write-down scenario, shareholders are the first to take a hit before additional Tier 1 bonds face losses. However, Swiss authorities inverted this hierarchy, letting shareholders get pennies on the dollar while additional Tier 1 holders got nothing. Experts speculate that the decision was taken to appease the Saudis and stop them pulling business from other Swiss lenders. The boss of a London-listed bank says, "I am absolutely convinced it was politically motivated." He adds that beyond keeping the Saudis on side, officials also likely wanted to give something back to long-standing domestic investors who had backed Credit Suisse for generations. My guess is that they felt the need to give some money back to the equity holders, and it will be those at the lower end of the register. All the Swiss people who own part of Credit Suisse because it's been around forever, he says. However, the returns handed to shareholders pale in comparison to the market value of their holdings, even in the days before Credit Suisse's emergency rescue. At Saudi National Bank, Chief Executive Said Mohammed Al Ghamdi has now replaced Al Qudari as chairman. Mohammed Ali Yassin, Chief Strategy Officer at Al Dhabi Capital, said Al Qudari, was a victim of giving his honest opinion at such a tense time for Credit Suisse. He adds, in hindsight, seeing the buyout rate of Credit Suisse by Union Bank of Switzerland, his answer was the right course of action, waiting for the crisis to be clearer. Shabir Malik, an analyst at FDF Hermes, believes Saudi National Bank is now unlikely to pursue its dreams of establishing itself as a global player in investment banking. The Credit Suisse investment worried certain investors mainly because Saudi National Bank invested overseas at a time when the domestic opportunity is more compelling, he said. Al Ghamdi's chief task for the moment will be simply to repair Saudi National Bank's reputation, while mortgage-backed securities will be assessing how the bank made such a costly blunder. Meanwhile, Union Bank of Switzerland is embarking on a major cost-cutting drive as it integrates its former biggest rival. As for Al Qudari, he is unlikely to re-emerge on the front lines of Saudi finance anytime soon. In an attempt at gallows humor, the chief executive of the London-listed bank says, "I don't know what happens when you lose your job at a large Saudi bank. Do you think he's buried in the desert? I have this whole image that it has not ended well. We will never see him again." Thanks for watching our video. We hope you found it helpful and informative. We would love to hear your thoughts, so please leave a comment below and let us know what you think. If you found this video helpful, please give it a thumbs up and consider subscribing to our channel for more content like this. And don't forget to hit the notification bell to be notified when we upload new video. Thanks again for watching, and we'll see you in the next one.